Today, we are going through Nate's blog post about what he is seeing in the Category 5 perfect storm that is slowly being baked in the financial system. Stay tuned. Hello, everybody. Welcome back to TFE with Nate and Ashley. We have upgraded some of our headphones and microphones, but today we are making a cake of all the perfect ingredients you need to potentially make a Category 5 perfect storm in the financial world. I'm going to hand it over to Nate because this is his setup and he is the chef for today. Go ahead.
So we're gonna have a little bit of a different video here. This is probably gonna be a little bit on the longer side, but what we want to do is go over occasionally some of my blog posts that I put out that are like 200 hours long to read. So maybe we can give you a 10 or 15-minute abridged version. So the setup for this whole thing was basically in here in the article. I had seen a chart a few days ago from Sven Northman Trader on Twitter. This chart is a rising wedge, and this kind of set off a little bit of warning signs for me. And I'm like, okay, well, let me look into what else is going on. And I've known for quite some time, I think many of you have known for quite some time, that there's a whole lot of stuff going on with risk. And there's all these guys on YouTube talking about, the sky is going to fall tomorrow. And I can say that what I have is some concern in the short term. I don't know what's going to happen. Nobody really does. But I wanted to go over, as a setup for this, some different types of crashes that might happen that people don't think about. So the first one is, everyone thinks of the 1929 crash, and there was a first time crash and then a second time crash, and there's like, you lose like 80 or 90% of the market. This is kind of what happened 2000 in 2020, where you just have the cliff dive. That's the first thing. So most people
And
think,
this is
okay,
the
well,
pattern that most people, when they, even an everyday person, when they hear the word stock market crash, this is what they envision. But crashes can take on different, there's different types of them. Right.
And these are the types of things that, I didn't know about up until recently. But I thank a lot of people on YouTube for helping educate me about some of this. And another thing might be like another type of crash. If you think about, let's just say over the next 2 or 3 years, that stock market starts to go down slightly, but as it starts to go down, maybe the Fed is buying all kinds of bonds or the corporate bonds, and it's like an easy, gentle landing. So as it starts to go down, it goes down, and before you know it, you're down 10%, but it's like, it's going to rebound, right? But with that, what if inflation keeps going up? 5, 10, 15, 20% starts going up. Now, so this is the second type, is like just letting the air out of the balloon slowly over the course of maybe a year, 2 years, before you know it. And forget the 10-year up here. I'm just using this as an example.
Right. Okay.
Another
Just
thing
as
is
like
what
the
people,
visual.
yeah, another thing what people might talk about is the stagflation, where just think about like your favorite your favorite stocks are range bound. They just bounce around for the next couple years in this certain range, but maybe it goes up slightly. Maybe it goes up 3 or 5%. Now, all of that, think about in the concept of inflation. Now, right now, obviously, the Fed is saying that the inflation is transitory, but there's a lot of heavy hitters out that are coming out now and saying that the inflation is not transitory; it's going to be here. You're seeing ice cream parlors hiring people for $15 an hour, and everyone's like, whoa, whoa, but they don't realize on the other end of that is a $12 ice cream cone, and no one's going to be able to afford that. So, yeah, so there's a lot of issues right now with shortages, with backlogs, and so those are the types of things I wanted to keep in mind here before I go
Remember
into
when
this article.
you and I were chatting off camera, and you pointed out that thing in that wedge, that rising wedge, the first one, and you were talking how, go just up a little bit. Oh yeah, perfect. And you were talking about, see those resistance lines there, that's actually high frequency trading and robots and computers doing this trading. So even as humans, we're looking at this emotionally as if this is human beings doing this. But you were saying 90% of it,
Well, I mean, a lot of it could be
very
humans, but what you hear about a lot nowadays, and I'm not as part of Wall Street, so I can't tell you about the expert side of this, but what you hear is on a lot of this that there's a lot of high frequency trading going on. So
hmm
when you see these lines that we're drawing, a computer, in a sense, could be also seeing these lines mathematically, and you see the psychology of something going up, and you buy,
right,
and then a computer might see these lines and then do sells. So old school, the Wall Street traders would be probably doing this on their own, but
right.
you have the technical side of things where
Wow.
these types of charts can be drawn out and their behavior patterns. So what this will actually be telling you is that there's some sort of resolution coming here. There's energy building.
hmm
Now it doesn't necessarily tell you it's going to drop off a cliff. It could, and it
Right.
might drop off a cliff 60 or 70% of the time. But let's put this in context of everything else that's going on. And when I saw this and how Sven had drawn this so perfectly, and I'm
Right.
looking at it and I'm like, oh, that's what that looks like. So it just, to me, it
Ooh,
was like it was too perfect.
right.
And
So was
and
this
when you're
like the
drawing,
first alarm? Like, so you've been, going through your day
well,
last few months, whatever, seeing all this crazy stuff happening. And was this sort of the thing that went like that?
there's a couple other things for time. I'll get into that in the article here, but
Yeah.
I think everybody that has a lot of money in the market is on edge.
Right.
Everyone's worried about, hey, should I just take all the money out? But if you
Yeah.
take all the money out and inflation happens and all of your stocks go up, you got this pile of cash and you're left behind.
Mm-hmm.
So if you take it out, you risk being left behind. But if you leave it in,
Right.
you could have it where overnight stocks crash 1,000 in futures, and before you can get into trade, you've lost half your money. So there's a constant risk that
Goodness.
investors are dealing with right now. But I wanted to kind of point out the concept of this article for me was I always play with some short-term options calls and stuff like that. And I don't want to get into specific equities because that's just a very bad thing. Um, I am
Right.
not a paid professional in that area. I'm just saying is from my personal risk. I saw concern here that said, hey, maybe I should get out of my short term calls. This is
Mm-hmm.
not telling anyone to short anything. This is not telling anyone to do puts. This is just telling me that I'm looking at this stuff and I saw some concern. So the first thing here, obviously,
So
was
when
the
you say
wedge,
you
but
got rid of your short-term calls, that means
yeah,
what?
yeah.
Like for
So
somebody who
I
doesn't know what you're saying.
So for instance, like if you had, I'm just going to use this as an example. You want to play silver with SLV, and for argument's sake, you may have call options for within the next 2 or 3 months or 2 weeks. I felt that the volatility in the next couple months, possibly down,
Mm-hmm.
could take all of my money, because when you play these call options, you're putting your money in, you can lose it all. Whereas,
Okay.
if you're just buying an equity, any equity, and it goes down 30%, if you hold on to it long enough, it can recover its value,
Right.
and you could be okay. But with call options and
It's
short
gone.
term, it's gone.
That's it.
So for
Right. There's
me,
no
I wanted to get
recovery.
out of those short term risks. Right.
Right.
So the big thing is that people can say, okay, the market's going to crash. Okay, great. But trying to time any of this stuff is where you run into some problems, because I'll get into it further with what David Hunter said, but I'm going to run through some of these things
Yeah,
here
go
I
for it.
covered in my article.
Let's do it.
So
Yeah.
the first thing was the wedge pattern. It just, I was like, okay, this looks like something's going to happen sooner rather than later.
Mm-hmm.
So
Mm-hmm.
this could be, I don't know, in the next month. It could be in the next 2 months.
Could
It
be
could be any
tomorrow.
day now. Yeah. So for
Right.
me, I was like, okay. So my options that I have for January of next year, I said, you know what? Okay, if there is a sharp drop, maybe the stuff recovers by then. So I wasn't too concerned about that, but you need to talk to your own financial people about that stuff.
Mm-hmm.
So
Mm-hmm.
I was just worried about stuff the next couple months. But what were some of the other signs at the top I wanted to look at? What other things might be screaming at all of us that we're ignoring? And the first thing was this Dogecoin,
Yeah,
or
I can't.
doggy
I
doggy coin,
can't.
or whatever you want to call it. The crypto that started as a joke is now the third largest crypto that's out there. And you were mentioning it. That's like embarrassing to you as a crypto holder.
I,
So
yeah, yeah.
yeah, I think just the other night it dropped 11% overnight. It was at 82 billion the other day. I'm not sure what it's at now, but funny
Did you
funny
see
thing.
that it was valued more than Honda?
Yeah, I saw that, and it's also more than Barrick and Newmont combined, depending on what day you're looking at. So the two largest gold miners,
Scary. Yeah, it's very
I
scary.
saw Barrick last summer was I think 60 billion. So I don't know if it's 45 billion now, whatever it is, but it's possible that the top two gold companies combined are less than Doggy Coin.
Yeah.
So I saw that this was a sign of the top, and okay. So quick shout out here. I stole this picture off of Google. Uh, and it turns out one of my readers, Ari, wrote to me and said, "Hey, funny story. My wife actually took that picture." I was like,
That's too
"That's
funny.
cool." So I just wanted to have a quick shout out here to credit for that
Yeah, thanks, guys.
To Ari's wife. I don't know your name, but but thank you for the nice picture.
Very
Um,
cute.
I also made some mention here about how there's 9,200 cryptos that are out there. So I don't want to get the crypto community mad at me, but this is kind of like the VHS beta wars, where over the
All
course of the
right.
next weeks, months, years, you may only end up with 10 or 20 cryptos in 5 years from now. So there's a lot of this is a lot of people that are listening to this weren't around during the dot-com boom.
Right.
I was an IT worker during that, and you had
Mm,
pets.com, you had everything.com, and people were throwing money at it. And
yeah.
what happens was they consolidated. Many of these things were not viable, and they all collapsed. And this is potentially what's going to happen if your crypto of choice is great and you love it. Um, there's probably a handful of cryptos that may actually be around in 5 years. So I
So
don't
it's
want to.
worth mentioning. I just want to say, just while we're all here, there's crypto and then there's Bitcoin, and they are two completely different beasts. Somebody who's a Bitcoin investor is, you know, um,
Well,
yeah,
I'm gonna make a quick comment on that. I did watch some Michael Saylor videos lately. I'm taking your cue and I'm trying to get educated on Bitcoin before I smash it too hard. And Saylor is of the he wants it to be called property. And I've
right.
classified it as property before, and I've
Yeah,
had
I
people write
remember.
me back yelling at me like, "What are you talking about? It's money." And I'm like,
It's not
Saylor
money
himself
yet.
says it's property. And the
Yeah, it's
reason
not
for it
money
being
yet.
is because if it's classified as currency, you might have problems with the IRS. So
Okay.
it's better for you guys to try and claim that this is property rather
Right.
than currency. Because if you're going to bullion websites right now, you can actually buy things in Bitcoin, which
Okay.
makes it a currency, which then starts
Okay.
to get problems with the IRS. And I'll cover some of that a little bit below.
Okay.
But Peter here from GoldSeek actually made up, a nice chart here that this is probably what,
Yep.
9,000 of the 9,200 coins are going to look like in the next 10 years.
Hate to say it, but
Yeah.
yeah.
So the best of the best will survive.
Right.
The technology isn't going to go anywhere. Whoever wins
Right.
this, I don't know. But anyway, I just wanted to make mention that if you have 9,200 cryptos and it's like $2 or $3 trillion valuation, there's a lot of money going into that, and there's going to be a lot of them
Jeez.
collapsing.
Oh,
So
geez.
whenever that happens, I don't know.
Which is super
Uh,
deflationary.
yeah, there's going to be a lot of money that's coming out of that, and where is it going to go? So it goes to cash.
I,
Does it go to
I pray
gold?
that some people, like you say at the bottom here,
Yeah.
are going to take lock some profits in, because if they don't and they lose it or they sell it, then that wealth is
Yeah.
destroyed in that process, right?
Thanks for bringing that up. In the article, I just basically said, you know what, I'm not much of a crypto guy. I do like one in particular, but the point of me writing a lot of this stuff was if you do have some profits here, take some profits. This is not financial advice.
Seriously. Yeah,
This
just
is
common sense.
common
Like,
sense.
yeah.
If you're like, let's YOLO my 401k into it.
Oh my.
Yeah, yeah, I've seen some of that, and that was also something I saw. I saw a tweet about somebody cashing in their 401k to then go into Doggy Coin or Dogecoin or whatever you want to call it. Now,
Oh, it's so
just a
sad.
side note, I know that who is it? Elon Musk is going to be on Saturday Night Live on Saturday, so
Okay.
people think that there may be some references to Dogecoin on Saturday Night Live, and that might make the profile higher, and maybe that's why they're getting in now. But I don't, if there's no mention of that at all, because there might be securities violations with him starting to talk about that. So if he does stay away from that, what does that price look like on Monday? Is that crash then?
Mm.
Because no what so
Never
it's a
mind
risky
Monday,
business.
Sunday at 12:01
Oh
a.m.
yeah, that's right. That's right. You don't have to wait.
Crypto's open 24/7.
So moving on here real quick, another thing that we had talked about was PE ratio is at an all-time high for pretty much everything right now. Everything is overvalued, and one in particular I wanted to call out was Tesla at 1150. Now Tesla's been much higher. I think I saw it once at like 1750. Now I don't want to bash Tesla because there goes a bunch of my subscribers, but I love Tesla. Not
Well,
at
you
this
did, but
price.
you did a report on it for
Yeah,
your, right?
I did the 125-page report on it.
Yeah,
I love
this is not a let's bash Tesla scene,
I love them,
they're, yeah,
but not at that price. And I've made fun of Tesla to my friends, calling it a glorified lemonade stand, and they make the
right,
best lemonade ever.
right,
But when you're at that kind of valuation of 1150, you need to do a lot more of expansion. And I in some of my videos I said, hey Elon, why don't you just buy Volkswagen or buy Ford or buy one of these companies and then use their their delivery system and their
right.
automation, their ability to produce a lot more cars. Right now they're not, from what, 80 billion, was it 800 billion valuation, and they made like 400 million profit, and most of that was because of EV credits.
Oh,
So
geez.
yeah, so that's not
Okay.
good.
So hold on a second, just for the people that maybe don't really understand, PEs or why this is so shocking. Maybe you could just remember we were chatting about what a PE ratio is and like the
Yeah,
actual like normal
so
range.
I'm not a CPA, I'm not an accountant, I'm not a Wall Street genius, so I'm going to keep this very high level for those that are watching this for some education.
Explain it to
um,
me like I'm five.
Yeah, the sweet spot here that I'm looking for on S&P is probably somewhere between 12 and 20. And if if the PE ratio is somewhere around 30, I'm thinking, okay, well, let's expand some factories. Let's expand more. When you're looking at 1150, you need to like buy 10 car companies.
Yeah,
That's what
right.
you need to do with that money. And instead they were like buying Bitcoin and stuff, and it's like, okay, what are you in the business of doing?
Mm-hmm. Mm-hmm.
So if you're an investor, you're the case here that you can argue against me, which is perfectly rational, is you're talking about like Amazon.com. Now their PE ratios were probably stupid crazy as well, and they
Right.
lost money for like a decade, and now look how big they are.
Right.
So if you believe in your product and you're okay with that, great. But if you have a lot of other companies that are this severely overvalued, that can be a problem. So
But this means that like people are giving, they're investing in Tesla. They've given and everyday retail investors, institutional investors, ARK, Kathy Wood, the whole jam gambit. What they're doing is they're throwing money at Tesla and saying, go do something with this. But what you're
yes,
saying is they, like at this rate, it's like like you just said, they'd have to go buy 10 car companies. Like this is
yeah.
crazy, crazy. They don't even know how to grow into that kind of
Yeah, and
money.
at the same time, you have other technology, like a VW or a Ford. Some
Yeah.
of them are catching up with some of the technology.
Yeah.
So
Yeah, for sure.
then you have China also creating EVs that are much cheaper, that are very small. So you
Mm.
now have, you pull out, your business school SWOT analysis or SWOT analysis, whatever you want to call it. You start having a lot of threats from a lot of entities that are now going to cut into your revenues. So at the same time, you have this PE ratio, you start to have, lose your market share. So I want to get out of that swim lane because I'm not a Wall Street guy. But the point
But what
is
you're
that,
saying is that it's obviously a concerning number. Like
yeah,
this 1150 thing,
yeah,
it's a big number. Yeah.
well, for them particularly, but reading down through here, Dave writes, at today's valuation, the stock market would need to fall 30% overnight in order to match the peak of what is
Peak.
widely considered the greatest bubble in modern history.
So is he talking about GFC in
Yeah,
2008?
everything. He's talking about if the stock market drops by 30%, at
Okay.
that point, it's the all time high.
Oh.
We're that far over. So yeah, and
Okay.
it keeps inflating. Um, I'll talk about below. There's just money getting printed everywhere. So
Phew.
another sign that worries me was I saw some of this last February. I saw some of this recently. I don't know. I saw some charts of this. The percent of it was a wavy chart of insider selling. But recently, I don't want to pick on any particular company,
Yeah.
but I did see this posted by one of the guys I subscribe to with Mining Stock Journal. Dave Pranzler put this out there. Now he also has a short seller's journal, so he could be putting out some information that helps him. So I don't want to get into that particular
Right.
company too much. That I wanted to show is that with this is that if an owner of a company, this guy's listed as a 10% owner, but if you're an owner of a company and you come out and you drop 1 million shares in a day, and you can really take down the price of the stock and people would notice. But if you're selling
Mm-hmm.
50,000 shares a day over the course of 20 trading days, you might be able to mask it in daily trading.
Right.
So this could be what a lot of CEOs might be doing right now if they think there's a top in and there might be a significant crash. They might be, cashing in some of their chips right now. I just saw
Uh-huh.
recently Bezos sold 300 million of stock. Now, for
Yeah.
me or you, that's a lifetime fortune. We're done working for him. It's like I actually did the numbers. It was like 1 or 2% of his net worth,
Good.
one and a half, whatever it is,
Yeah. Sure.
maybe 2% with the divorce. Point is that
Jump change.
there's a lot of insider selling going on behind the scenes that would lead someone to believe a top might be in.
Mm-hmm.
Also, this came across recently that the IRS is now looking at crypto. And
Mm-hmm.
I don't want to get
Mm-hmm.
too much into this, but if the IRS is now starting to go after some exchanges, this might
Mm-hmm.
actually freeze up some exchanges from actually being able to trade crypto. And some of those that are less liquid might cease to exist.
Right, right,
So
right.
the IRS wants to come after capital gains as well. So,
Yeah.
I was reading some article that basically that it was a guy that it was a great thread. It was a guy that was recently working for a crypto company. Basically said that accountants have no idea what to deal with taxes with this. He's like, good luck trying to find
Did I not,
legal.
didn't I share that thread? Because
Yeah,
in that
was
one
that
thing,
you?
he
Was
goes, I
that you?
guarantee you, there's not one person in your country that knows how to do your taxes.
Yeah, it was in
Yeah.
a state. It was in a state. I think he was talking about try to find a lawyer in your state
Yes,
that actually knows the tax laws of cryptos. So
exactly.
there can be a lot of people right now that are actually trading cryptos all the time that have no idea that they have
Right.
to pay capital gains on things.
Right, right,
So
right,
there could
right.
be a lot coming through with this. And I make mention of this as a top because this could be the beginning of some of the cryptos starting to sell off. If
Right.
some of this stuff starts happening, some of this trillions of dollars may start leaving these cryptos into something else.
Mm-hmm, mm-hmm, mm-hmm.
So that was another thing. Earlier this week, Yellen sneezed and the market died. It
Mm.
was funny because gold was at 1799.50, and people were saying 1800 is a big number that we got to cross over. And
So
at
close.
1799.50, Yellen comes out and says, "Well, we might have to raise rates soon." Everything collapsed. And then a couple
Mm.
hours later, she's like, "Yeah, no, I misspoke." And then it was just, you can't even sneeze um, about thinking about taking rates
No,
down. No, you
no,
just can't. You can't do it.
no, no, no.
Along with that, let's see, inflation running hot. I covered that a little bit earlier, where if you have inflation continuing to go up like this, um, things are just going to continually inflate, and your bubble is going to get bigger and bigger and bigger until it either pops or somebody starts to slowly deflate it, or the inflation outpaces your market gains. So if you think your 3 or 4% stock market gains are good, but if inflation is 10%, you're losing money every year. So
Oh, which don't get it twisted. It's definitely 10%, if not higher.
yeah, Gold Silver just put out they just put out a video yesterday. I wish I can remember the exact details, but they were saying that there was this I think it was the Chapua Index. I think that's the name of it. They said that they were finding that this index has the top 500 products that are bought, and they track them, and it's been actually showing that inflation is closer to 11 to 13%.
Lovely.
So what's the problem here, I think, is when people start realizing inflation is really much higher than what they've
Mm,
been led to believe,
mm-hmm.
what's that going to do to the economy? So
Mm.
another thing, you're going to love this one. I was reading an article that in San Francisco, you can put your house on the market and get 1 million over asking price without even blinking. How does that resonate with you up there?
It speaks to my soul because that's exactly what's happening here. Maybe not a million, but we've got, there's parts of the GTA, which is the Greater Toronto Area, that are not remarkable places. Absolutely no offense to these cute little towns or cities, but I mean, a semi-detached going for $1 million is quite obscene here. I don't know who is buying this stuff, but it ain't my generation.
Well,
Hi,
what I
coming
can
to you
tell
live
you,
from my grandparents' basement. Good.
so I'm seeing these articles popping up, and all I'm sitting here thinking to myself is people with a lot of money and a lot of cash are taking that cash and
Yeah.
doing whatever they can to throw it into something.
Yeah. Real.
Um,
Something
at the
real.
at the same time, my brother actually experienced this. He just moved out to Omaha. Okay, I don't know who intentionally moves to Omaha, but he actually moved out there with his partner, and so when he moved out there, he sold his house, and he was actually getting 20,000 more than asked for it, but the bank would not approve it because they wouldn't value it that higher with the appraisal. So
What?
the problem with it being is that people are willing to pay these higher numbers, but the banks don't value them high enough. So those $1 million over asking price, I think a lot of these are probably cash prices, which is
What?
it's making the housing prices go much higher. But the banks are not willing to take that risk because what happens is if you sell that house for $1 million more and then the stock market collapses and the housing market goes to crap, the banks are holding that mortgage, so they're not actually approving the higher values.
Wow.
Yeah. So another thing is there's just bubbles everywhere. I just mentioned above where GV put this out there, Gold Ventures on Twitter. He put this chart out there, which is beautiful. This is the gold cup and handle formation. Now, the last, I don't know, 8 months or so, we've been going through this whole problem with gold consolidating, but this was part of this whole cup and handle, the technical formation stuff.
Right.
And right here, this was a resistance line that basically said, hey, if this goes over 1800, all hell's going to break loose. Well,
Right.
Yellen sneezed at 1790,
I was
1799.50,
just gonna say how convenient.
and then
How
and then that
convenient.
knocked it down, but it didn't
But
keep
why
it down.
can
And
I
right
just I'm
now,
gonna
go ahead.
why did it knock it down? Because
Well,
if they're gonna
so
raise rates, shouldn't everybody be going to safety, which
well,
would be gold
if
or
the
no?
rates are going to be going higher, then what happens is the government needs to borrow money at higher rates, which then makes their debt unserviceable, which is why a lot of people think that they're going to be inflating their way out of things. So
Mm,
you might not see this, but
mm,
you might see this with
mm-hmm,
that.
mm-hmm,
So
mm-hmm.
people look at their 401k and they see the number has not changed. But this
Because
means
their
that
purchasing power.
your
Yeah,
groceries cost 20
exactly.
20 times more at the store.
Exactly.
So anyway, with the bubbles that are going on everywhere, the one thing that really is not in a bubble yet is gold and silver.
Yeah, they're pretty
So
hated.
and and well, just recently, now I guess gold is up $40 in the last 2 days or something like that. So it's quite possible
Is it over
now.
the 1800 mark?
Oh yeah,
Oh, it is.
today
Okay.
and yesterday, yeah, it's like I think right now 1840 something like. Oh, it's up
Oh,
here
okay.
1830 as we speak.
Okay.
So also with this David Hunter with timing for all this, I've watched like 8 or 9 David Hunter videos. I love listening to him.
Right.
The big picture of what he thinks is going to happen, I agree with. Um, when he starts putting targets out for numbers, some of that is best guess, some of that might be technical. But he was talking about 37,000 on the Dow. Right now it's just over 34,000. That he thinks when it hits 37,000, the global bust is going to happen somewhere around there. And he said that could be on the low end. So it could be running higher than that. The
Mm-hmm.
problem with it being is trying to time all of these things is very
Yeah,
difficult.
of course.
I
Yeah.
so he talked about possibly until the end of quarter 2. So that being said, is with David Hunter's um, uh, his forecast of the timing of this, figuring, I thought, okay, well, we had until the end of June, in which I'll talk about something else below here, but I thought we had until the end of June, but I saw
Yeah.
Sven's chart there, and I'm like, you know
The
what?
wedge.
Okay,
Yeah.
it might be the end of June, it might be tomorrow,
Right.
and I'm like, eesh. So David
Yeah.
Hunter, if you
Yeah.
guys have not watched any of his videos, check him out. He'll scare the bejesus out of you a bit,
Yes,
but
he will. Yep.
but it helps you at least understand what he thinks is going to be part of that commodity super cycle
Are
the
you going
second
to
half.
show that Dow gold divergence with this?
Did I have that
Remember?
up?
I
Yeah.
think
So,
so.
oh yeah. So that was also something I wanted to cover was I didn't write this in the article, but it was something that I noticed last year was, me and my buddies were getting involved with the stock market at that point. I was buying mining stocks. And while in early February, all this COVID stuff was happening, I'm like, dude, they're going to shut everything down. So all of my gold money, all of my miners are going up and the Dow was starting to go down. So they split. I mean, everyone thinks that the stock market and gold will either go at the same time or against each other. um,
Mm-hmm.
it depends. Sometimes they go in tandem and sometimes they go inverse. So what was happening was they were going in tandem, and then in February last year there was a big divergence, and
Uh-huh.
then after the crash that took everything down, they both went up, and then in July last year is when that split happened again. So that's when
Uh-huh.
gold
Uh-huh.
started having that flagging pattern,
Yeah.
and then the Dow kept going up. So my buddies, the last 8 months, have been killing me because all of their stuff has been going up, and all of my
Right.
gold miners have not been
Right.
moving much,
Of
right?
course. Of course. Yeah.
However, the last month or so, if you take a look, now they're going in tandem again, which was
Right.
like in tandem up here.
Right.
So it's possible. What I was looking at is when I was writing this, Dow was down and gold was up. So I'm like,
Uh-huh.
okay, are
Uh-huh.
they going inverse again? So this is
Uh-huh.
something I'm going to be looking for over the next 4 to 6 weeks. Is
Right.
the Dow going to possibly go like this and gold going to start to go up?
Yeah.
Or is Dow
Right.
going to or is the Dow going to start to slide a little bit?
Uh-huh.
So that's what I'm looking at with the gold. So that right now these haven't split, but when they start to split more, that's when I'm going to get even a little bit more nervous.
Right. Right.
So
Very interesting. Very, very interesting. Wow.
thanks for reminding me of that.
Yeah, no
So
worries. I thought that was
also
such
with
a
that,
helpful illustration.
we're talking about more stimulus. We keep hearing about more and more packages. This morning, the labor numbers for this country came out. They were expecting about 1 million jobs.
Right.
They only got 250,000, and
What?
that's why gold and silver popped much
Nate.
hotter today. So what was very
Oh,
interesting about that was also the stock market kind of looked bad at first, and then all of a sudden stock market's up 200 points here, and I'm like, that
uh,
doesn't really make a lot of sense. Yeah, so that is where you're seeing that no matter what is happening, the Dow is going up. And that's another sign
oh,
of the top.
that's
That's another
really
sign of the top.
scary.
Where I
Goodness.
was also pointing this out here was, this complacency. I'm sorry, I apologize. I should have taken the 5 minutes and
Don't worry about it.
redid this chart, but the what I wanted to point out was this market psychology here right now is
Right.
that everybody's in this complacency area
Yep.
where no matter what happens, stocks are going to go up. So
Yeah.
euphoria happened. We had the March collapse last year. Now we're in this complacency. Now they inflated this a little higher, so it went up. But I think we're in this complacency area where I believe that most people just think that no matter what's going to happen, stocks are going to go up. And there's a whole bunch of people that are on Robinhood right now that have actually never seen a recession.
But
They've never.
and they're probably, to be honest with you, they're probably not wrong. I mean, when you have, stimulus coming in,
Oh yeah.
right, left, and center, yes, it is going to go up. But that Venezuelan stock chart that you had up,
Yep.
this is what it's going to look like. So for
Yeah.
maybe people that, because there's, for example, if I went and showed this to some of my viewers on my other pages, they wouldn't understand why this chart is so scary, because you and I have talked about how much price is so distorting for what it does to purchasing power. Because when you start to measure these markets in scarce assets, whether you're measuring it in gold, oil, silver, Bitcoin, they're actually going down in value. And that's something that I'm always trying to drive home for people, is that purchasing power is what we have to pay attention to. And that's why, yes, the markets could definitely go higher and everybody's just sort of hanging out being like, oh yeah, we're just cooling off till the next rally, because they know that the Fed is, or the Bank of Canada or wherever you are, is just going to keep throwing money at it. But at what cost? Please
So,
continue.
so I'm gonna throw something out there to bake your noodle. I think this is Mike Maloney that said this the other day. I think it was him. But there's a question here now. You have copper at like $4.30 a pound, whatever that is. But the
Right.
question now is, are these things too scarce, or
Mm,
is there too much money? Is there too much currency? Sorry, Mike.
right.
So the problem that you're running into is if you have these scarce resources and you have so many trillions now bidding against them, you're bidding
Yeah.
the prices of these things up. So is
100%.
the problem is that there too little copper? Is there too little silver? Or is there too much currency hitting the system right now? So that's
Definitely too much currency.
yeah, and that's what's going to be causing a lot of this inflation.
That's my
So
response.
so what else did I miss here? Oh yeah, I wanted to make mention that the Fed is stuck in a bear trap. So we talked a little bit about the interest rates. Right now, the Fed can't raise the interest rates because if they do, it's going to take the stock market down with one of these looking things. Okay,
Uh,
so what they kind of
and
want to
for
do
people
is
that don't understand why raising rates would bring a stock market down, can you just do a quick, 10-second blurb? Tell
so
it to me like I'm five, why that
real
matters?
real quick. I make the analogy. It makes it look like the government is refinancing their house every 6 months or 3 months or whatever it is. So, you buy a house at 6% and you have all this, this cost every month for a mortgage, but then they come to you and you say, "Do you want to refinance for 5.5%?" Well, sure, yeah, I'll
Yeah,
get more money per month.
right.
3%, 2%, great. But now you have this mortgage at 1%, and they turn around and they tell you, well, you have to refinance at 6%. Now all of a sudden, you know, you can't afford the monthly payments. So what
Okay,
what
okay.
big picture from this is if rates start to go up, what can happen is a government will default with not being able to pay the debt. So what you
Okay.
try and do if you're the government is you try and let the stock market do this while you inflate your debt away doing this. So that's kind of what I think they're trying to do behind the scenes. So I'm not sure you're going to see this cliff drop
Mm,
at the end of May or at the end of June. But what I was thinking was, I talked to you beforehand, was I think we could have a drop like this for 10%, 5%, 15%. We could have a drop like this, followed by a sustained 1 year drop like this,
yuck.
followed by 8 or 10 years of this. Meanwhile, this is going on the whole time. So you have three different types of crashes over the next 10 years. But if you're looking at your 401k, it looks like the numbers are the same. But
Right.
meanwhile, you go to
Oh
the
my
grocery store
god.
and a carton of eggs costs you $45.
Oh my goodness.
So
It's just
that's
so distorted.
yeah, so
Yeah.
that's the bear trap they're kind of stuck in because rates have been going down for 40 years and now yeah, 40 years. That's what this is. This is a 40 years of interest rates going down. They refinanced their
Gee.
house. They refinanced their house over the last 40 years. And now rates start popping up a little bit and the stock market crashes. So, and with that stock market crash, this is one of the things I wrote an article about last year was I was thinking in July of last year, this is all going to go to heck because
Same.
well, my problem was with that was, well, if these rates are going up and the like, all that cheap money that tech is using is going to dry up. So all the money's going to roll out of tech and into like gold and silver. So I went
Right.
all in on gold and silver,
Right.
but I underestimated how much money they could print. I underestimated it completely. So I was wrong with the timing on that by far. But I think right now what you're going to start to see is money roll out of tech. And where is it going to go? I think gold and silver because they're by far the most undervalued and the only things that aren't in a bubble. Um,
Literally.
so I think that bear trap is right there. I saw something with Mike Maloney. I think it's 55% or so of households are now invested in the stock market, which was an
Oh
all-time
God.
high. Whatever that number was, I apologize if this is incorrect, but it just showed that all households right now essentially are part of the stock market, and that is another sign of the top.
Gosh. Oh my God.
So every single time, I think it was over the last 8 times or something that there was a big crash, there were high percentages of homeowners that were involved with the stock market. So you get in all the suckers and then you take the rug out from under them.
So can I just say something because the stock market is still a really important wealth builder for people, right? So let's say that we have people watching this, that are in the stock market. Listen, this is not go and sell everything run away with your hair on fire. If you're not retiring in the next decade, you could probably just like hold on through it, keep buying the dip, as they say,
Who
and wait
knows?
for it to go back. But my concern
Yeah.
is, and this is my second part that I want to ask you because you're older than me and you've been through more of this than me, is how is the stock market going to perform if the monetary system changes? So if it's not an inflationary one, right? Because the stock market benefits from money printing and inflation. So what happens if the world goes, and I'm not in the club to even know the answer to this question, but we're just, having a chat, being cute and brainstorming. What happens if the world does go to either a gold standard or a Bitcoin standard of something of a scarce store of value? What does the market look like then? Does it just sort of stay like stagnant, or does it matter because now your
Well,
purchasing power is actually gaining power as opposed to
well,
losing power? I don't
all of
know.
that stuff is priced in US dollars right now. So the
Yeah.
level of fire and brimstone that would happen, I think we're talking about another hour-long video just to discuss what could happen from
Right.
there.
Okay.
So
Fair enough. Fair
if
enough.
anybody wants to make any comments below on
Yeah.
what they think might happen if the dollar goes bye-bye, what do they think is going to
Mm-mm.
happen? So, I mean, obviously, when you buy a company, when you buy a pizza shop, when you buy stock in a company, you own a piece of that company. So
Mm.
if there is a form of stock market crash in some sense, you still own that company, and out of the ashes of that, you may have the best pizza shop that's ever been created, and
Right.
you rebound just fine
Right. Right.
in whatever currency it is.
Right.
Okay.
Okay.
So right now, like, you're talking about, owning property, your house, whether, who cares if the value of your house drops by half if you're going
Yeah.
to be living there for the next 40 years?
Well, exactly. Right. Right. Fair
Yeah.
enough.
So,
Okay.
there's a lot of questions that can come out of the rubble. Um, that's another conversation for another
Yeah.
day,
Yeah.
but,
I've got it written
uh,
down here. Don't worry. We're going to tackle that in the next
uh,
video.
another thing with the timing here I wanted to get into is Andrew Maguire and Basel III, whatever, however
I'm
you pronounce
sorry.
that.
I'm gonna wave my white flag here. What is Basel 3 or Basel 3?
So I'm not going to get too far into this, but this had to do with like coming out of the financial debacle in 2008. Long story short, in this country, they created a bunch of regulations so that,
Ah,
the
yes, yes, yes,
housing,
yes.
so that when banks, you lend money, you're doing a fractional reserve of 50 to 1. You all kinds of regulations with that. The
Got it.
Basel III, to the best of my understanding, that comes out of Basel, Switzerland, and that's more of a European type of standard to kind of get banks up, all speaking the same language, making sure that you're backing your assets with the right amount of dollars, and you're not
Okay.
like doing fractional reserve of 3,000 ounces of gold for every one that you're selling.
Okay, I got you. So it's sort of like a ratio system, essentially.
Yeah,
Like make
I
sure your ratios are not off in outer
Well,
space.
that's part of it. That NSFR, the state net stable funding ratios or whatever it is. I've done a deep dive on this a few times, so I'm
I'm
not
not
an expert on
surprised.
this. You know what? Go take a look at Rob Keynes' videos on Gold Silver Pros. He mentioned he's done 4 videos in this already.
Okay.
The reason I bring this up in this is because Andrew Maguire was basically saying that by the end of June, that all of these banks, uh, all these banks need to have their books squared, so to speak. So they're trying to get out of unallocated stuff. They're
Okay.
trying to get all of their fractional reserves all in line. So, long story short, with that was he was thinking, well, it might be $2,500 gold by the end of June. Uh,
Really?
might be $40 silver. Who knows?
Okay.
Who knows if that's the case?
Right.
The point being is that with timing of everything I'm thinking about, if silver and gold are actually as rehypothecated as people suggest, it's quite possible some banks might be dealing with a lot of bad problems before June 28th, possibly more European banks. So with that, it's just imagine in one day a European bank. I'm not going to name any names because I don't want to screw up with their stock or anything like
Yeah,
that.
yeah, yeah.
Just imagine a European bank one day comes out and says, you know what, they had to reprice some product they have because they had 50 to 1 silver, and they had to, buy it all out, and they had to take a $10 billion loss.
Right.
So it's quite possible banks over the course of the next couple months might be seeing some problems with some of these derivatives getting unwound. I don't know what the extent of it is going to be, but
Mm-hmm.
the
Mm-hmm.
whole point of this is that Andrew was talking about the end of June. The same thing David Hunter's talking about end of second quarter. Like, these are different reasons that are coming to the same conclusions of timing.
Mm-hmm.
So, and then you're looking at Sven's chart above, and it suggests in the next 4 to 6 weeks that there could be some problems if you're looking at that chart correctly. So
Interesting.
I'm adding this because this is a different way of coming to the same conclusion.
Like it. Yep. Yep. Yep.
So um, I'm not going to get too much into this here either, but one of the things I noticed was Bank of America recently borrowed 300 million ounces of silver from JPM, according to Ted Butler. Now, why would they borrow 300 million ounces?
Yeah.
Maybe they bought it. Maybe they borrowed it at $25 per ounce at that point. Who knows? We were looking at these charts, me and a bunch of guys on Twitter, and we were noticing that the banks were getting less and less short, and then all of a sudden this reversed. So last March, if you were basically JP Morgan, when price of silver went down to like 11 or $12,
Yeah. I
at
remember.
that point in time, it was reported that JP Morgan bought out of all of their short positions and they went net long. The point being, and that could have been something that propelled the price of silver up, from the bottom. But
Mm-hmm.
the point is if you're all these banks right now, why are you borrowing 300 million ounces of silver if the price of silver potentially is going to be going up with all this inflation going on? So part of this sent off some alarm bells with me, like, hey, these guys are not dumb people. Their bonuses are probably more than I'll ever make in a lifetime.
Yep.
And if they're borrowing 300 million ounces of silver at $25 an ounce or $24 an ounce, it's quite possible in the next 4, 8, 12, 6, 16 weeks, whatever it is, it's quite possible silver can drop to $14, $15 an ounce, in which case they just replace it with cash and they just double their money. Yeah. So
Okay.
or they buy back their shorts off the COMEX at that point in time, and then the price rises back up quickly. So I'm figuring if I'm in gold or silver, even if there's a cliff crash, the amount of short positions that are there, if this takes everything down with it, it's going to be potentially like last March. I was very interested in silver at 1175.
Right.
Uh, and I
Right.
think if people are net short at $12, $14 silver, and you got to buy back 300 million ounces, that's a good time to do it. So this chart here made a turn the
Mm.
last couple of weeks, and I'm wondering why that would happen. So again, this is not a conclusion. This is just other things that I'm seeing that could be adding to this
Right.
hypothesis
Like
that some bad things are happening.
another cute little ingredient in our cake.
Yeah, and part of that, just to conclude here, gold, since I wrote this, gold has been up like $40, something like that. I'm not trying to draw any massive screaming, chicken little sky is falling type of thing from this, but the reason I wrote this out was I wanted to show concern. I don't want anyone here selling off their whole profile and blaming me because they lost all their money. Because one thing that I did not cover here was that if you sell out and you're in cash and the stock market continues to go up for the next year or two, you're left behind. So while I'm avoiding downside risk, I've just added risk that I'm not going to
Right.
capture the upside. So I
Right.
want to I want to be clear there that
And
you
that's a
know
personal choice you're
yeah,
making, right?
yeah, and
Exactly.
that's just for me, and that was just for my short term stuff. My longer term options, I'm still holding on to them because if
Okay.
there is one of these things, I may have time to recover. But
Yeah.
that is a risk I'm willing to take, and I'm not
Right.
necessarily advising anyone.
Right.
So
Right. Right.
with that, I wanted to leave off with the tweet of the day that I'd seen, you had seen.
Oh,
Why don't you take it from here?
guys, this is such a good tweet. So, how much is a billion? A billion seconds ago, it was 1959. That just blows my mind. A billion minutes ago, Jesus was alive. That's the one that floored me personally. A billion hours ago, our ancestors were living in the Stone Age. A billion days ago, no one walked on earth with 2 feet. And $1 billion ago was only 8 hours and 20 minutes at the current rate of government printing. So just again, to give you get the reason why we're sharing this tweet is like to give you a measurement of what the word billion means. And we haven't even talked about the word trillion. But look at, I mean, a billion days ago, no one walked on 2 feet on earth. That's wild. But in government land with money printing, $1 billion ago was only 8 hours. Concerning. Danger, Will Robinson. You know, our little limbs are, you know, flailing all over the place. It's pretty scary stuff. But as scary as it is, I think Nate and I always want to keep driving home that if you're positioned correctly and you have your eyes open, you can benefit from this. So with that, let us know what maybe you guys are, you know, essentially gambling with. Maybe you've bought Dogecoin yourself. Maybe you've cashed out your portfolio. Maybe you've got more silver. And as always, guys, please don't forget to like and subscribe to our channels. It helps the algorithm in YouTube send this video out more and more. We really appreciate all your support. Till next time.